Hello everybody, I'm John with JP Strategic Investments, and today I just wanted to make a quick video about an interview I saw with Jim Cramer explaining what's happening with Rocket Company stock. And I think he really explains well in this interview why Rocket stock is in the situation that it's in right now. So I'm just going to play the interview and then I'll talk about it after.
Jim, we also have rocket companies in the news. It was also stop trading. This company is down the stock is down nearly 16%. And you said that investors think it's too risky to own Rocket here. I'm wondering if you agreed with that.
Well, I said it.
No, I mean, do you agree with investor sentiment here?
I think it's overdone. I look, Rocket said some things that you never want to hear. Talking about margin compression. And then when Jay was on, Jay Farner, I mean, Jay wants to dominate the industry. And Jay's capable of it. They have the best technology. They have great learning capabilities. But he wants to take share. And when you want to take share, what that says is, look out. I'm willing to lose, not money, but have lower gross margins in order to basically wipe out others and take business. And there are a lot of others. So I looked at it and I said, Jay's being aggressive. There'll be a price where Jay's aggression is priced in. And I think we've got it. I like that stock right here. I like it a lot. Now, these are two, you can say, listen, I like Etsy, Fallen Angel, Peloton, Fallen Angel, Rocket, Fallen Angel. But I have said over and over again, that this market gives you these opportunities for situations that seem like they're damaged, where what's really happened is the stock is overly discounting the negativity, and then when they actually report, they do pretty well. I would love to own Rocket for when it reports next.
So there are two main things that he's really getting at here. The first one, we're all aware of, rates are rising, margins are compressing. This is what they explained in their earnings. The second one, though, is about Jay being aggressive and the company's long-term strategy. Now, this is what I think is really important to focus on, because Jay being aggressive means two things. Now, the first thing that's going to happen is that margins are going to come down, and we saw that in their guidance that they gave for the next quarter. If you're going to attract customers, one of the main ways you're going to do that is through pricing. And so if they're going after a huge chunk of market share, they're going to have to adjust their pricing to attract customers. And the second thing they're going to do is aggressively spend on marketing, which they've already been doing over the last several quarters. Now, it's going to be a little different because margins are coming down and they're going to continue to be aggressive in marketing. I think one of the things Jay said to his CMO, he was talking about during an earnings call or during one of the webinars, he told his CMO not to increase the budget by tens of millions, but by hundreds of millions. So they're very aggressively going at marketing, and really they're playing this long-term game. And this is one of the main things that I think Rocket investors need to remember sometimes, myself included, is that this is not an aggressive exponential growth company, right? Jay had said when they first IPO'd, this is a get-rich-slow scheme. And so one of the things that we have to remember, and the main thing that I think Jim is getting at here, is that Rocket and Jay are willing to take cuts from the profits in the short term. They're playing the long-term game. So with Jay coming out and openly saying that he's willing to be very aggressive in marketing, very aggressive in lowering margins so that he can take that market share, that is going to hurt the stock in the short term. So when you look at the stock, when you see it down this much, keep that in the back of your mind. Keep that as some of the context around where the stock is right now and where it might go in the future. And so that's kind of the main thing that I wanted to go over here. I thought it was some really good remarks from Jim Cramer. I hope you guys found this helpful. If you did, as always, don't forget to like and subscribe. And other than that, see you next time and have a great day.